Euro dollar. So the euro remains under pressure, and the focus now is on next key support at 110.87, below which exposes more significant support from the 20th of July at 108.09 further down. At this point, any rallies continue to be classified as corrective, with only a break back above 115 to take the immediate pressure off the downside. Sterling dollar. So cable has rallied up to 156.59, but the rally has stalled out, with the market now looking to poise for bearish resumption, and a break back below recent support at 151.65 will do a good job of confirming, exposing next key support in the form of that low that we saw all the way back on the 4th of May, which comes in around 150.90. A break below 150.90 would of course then expose key psychological barriers at 150 further down. At this point, we'd need to see a break all the way back above that 156.59 high to take the pressure off the downside. Dollar yen. So dollar yen has been seeing a contraction in volatility over the past several sessions, though given the price action, the market looks to be putting in a lower top at 121.74, and the breakout should come to the downside, with the move seen accelerating back towards that low that we saw going back to the 24th of August at 116.12. At this point, only a break back above 121.74 would compromise the bearish outlook. Euro Swiss. So the Euro Swiss recovery structure remains well intact, with dips continuing to be well supported, and the market is now focused on the next key measured move upside extension towards 112. At this point, any setbacks should continue to be very well supported, with only a breakback below 107.14 to compromise this constructive outlook. Aussie dollar. So Aussie remains locked within a well-defined downtrend, with the latest corrective rally stalling out by 72.80, and the market is now poised for fresh downside to fresh multi-year lows below that recent low that we saw at 69.08 towards a measured move objective at 68.30 further down. At this point, only back above 72.80 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD just squeaked out a fresh multi-year, fresh 11-year high on Wednesday, with the market now focused on establishing above that recent 133.54, that previous 133.54 high, and moving up towards next key psychological barriers at 135 further up. At this point, any setback should be very well supported, with only a breakback below 128.60, that low going back to the 29th of July, to compromise the constructive outlook. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, with recent corrective gains stalling out well ahead of the 65 area, and the market looks poised for fresh lows below that August 24th multi-year low at 61.30. At this point, only back above that high that we saw going back to the 18th of September, which comes in around 64.57, would take the immediate pressure off the downside. SPX 500. So the S&P 500 continues to show signs of major topping, with the latest major rally, that rally out from those lows that we saw in the 1830 area, stalling out above 2000 at 2022, favoring the formation of a lower top, a medium-term lower top, and fresh downside extension, which will be confirmed on a breakback below that 24th of August low at 1833. At this point, only back above 2022 would take the pressure off the downside and put the pressure back on the top side, suggesting that this structural shift is now being compromised. Gold. So gold continues to look highly constructive after the market put in a low around the 1100 area. The market had recently established a low, a fresh multi-year low at 1073, but again is since looking more constructive following that support at 1100 and latest break to the upside back above the 1130 area. And now if we see a break back above recent highs at 1170, this will really confirm that constructive outlook, the recovery outlook, and open the door for an acceleration back towards 1233. At this point, only back below 1100 would compromise this constructive outlook for gold.